We have the defense space, which has been continuing to buzz, as we've highlighted. It's one after the other. Aerospace companies like HAL, shipyards like Mazgaon, and of course, companies like Bharat Dynamics have also been in focus. The government's big push for defense indigenization has been the underlying trigger. We have the management of Bharat Dynamics actually joining us right now. Stock's been a big winner. It's up about 50% over the last year. As per their investor meet, which was held earlier in June, they are expecting big orders and revenues to flow in post FY25. ICICI Securities, the broker, has put out a buy, and they like the name. We have Mr. P Radha Krishna, Director, Production and Chairman and Managing Director at Bharat Dynamics, joining us right now to take some questions. So, Mr. Krishna, good morning. Great to have you with us here. Thanks very much. Prashant this side.
Good morning, Prashant.
Mr. Krishna, is Bharat Dynamics a F525 and beyond kind of story? Or will we see what's happening right now, sir? In F523, as compared to the previous year, we did see a small dip in revenues and profits as well. How are things looking like in F524? So just sort of lay it out for us in terms of contextual information. Go on.
Yeah. Basically, yes, what you said is right, and we had a slight dip in 23. And FY24, we are expecting to cross 3,200 crores, at least the minimum. That is the minimum target we have set, and we are sure that it will be going beyond that. Other than that, we are looking at 24 and 25. There will be at least minimum of 5,000 crores. And above, from 25-26, it will be beyond 5,000.
All right. Hi, sir. Good morning. Good to hear. 3,200. I recall, in FY23, you fell a little bit short of the target, but you're saying for FY24, at least 3,200 crores, we'll take that. But I believe that going ahead, by FY27, you're expecting to nearly double revenues. So do you think that by FY27, revenues will be in the vicinity of around 6,500 crores approximately, if you could tell us that? And also, what is the rough margins we should be working with in the near term? That's FY24, FY25?
See, basically 25, 26 and 25, 26, 27, we are sure that the present order book is so good, and we are confident it will cross at least 6,000 plus. And the present margins, whatever you are taking, is we are a public sector, so we'll have the margins as per the government norms.
Okay, so it's about 16.5% in FY23. Are you saying that you will you'll be around that figure when you get to 5,000 crores kind of numbers on the revenue?
Definitely, it should be maintained.
Okay. So just to clarify, you're saying that by FY27, you will be at close to around 6,000 crores, right?
Yeah, 24, 25 and 25, 26 we'll go.
Got it. And also your last reported order book is close to around 24,000 crores. That's the number that we had. Could you give us an updated number if there is any change, and how much of that is from exports as well?
Actually, we have 20.350 crores net, and it was the gross what you have the figures. And the current export order we have is 2,600 crores. And in the near future, we are anticipating quite a good number of export orders.
Can you tell us the orders, the export orders that are in the pipeline? So currently 10% of your order book comes from exports. In the next 3 years, as your revenues jump up from 3,200 crore and double to 6,000 crore plus or minus, what would the export contribution look like given the export orders that you have in the pipeline and in hand?
Yeah, we are working with 3 to 4 foreign friendly countries, wherein we are targeting for Akash and Astra missiles. And we are confident that in next 1 to 2 years, we'll have export orders reasonably very good quantity. Almost it will be maintained. 10% will be maintained constantly.
Sir, the Prime Minister was in the US recently, and there have been specific agreements which have been signed. Some are in the works. Have you heard anything from the ministry with regards to technology tie-ups or anything at all with regards to the visit recently?
No. As of now, no.
Okay. As of now, no. Got it.
All right. So a couple of more questions. I'm looking at a couple of brokerage notes, and they're suggesting that actually margins for this year should be in excess of 20%. Is that correct?
Yeah, it should be. Yeah, let us wait and see.
But is that the target, 20% margins?
See, basically, as per the government norms, we are fixed with some target margins, but we'll improve our productivity and process control, with which we'll try to increase the profit margins. And it should be reasonably much better than last year.
All right. Also, your working capital days, it's at around 225 days, I think, so for the past year. What kind of working capital days should we be working with for the coming year?
It will be similar to that, little more.
How much more? I mean, 230 to 40 days? Should we be working with working capital days around?
40 days will be there.
240 days.
Right. Sir, you mentioned a couple of times that you have certain restrictions on margins with the government. Could you explain that? What exactly is that?
See, the margins are fixed for most of the government orders, what we receive from the MOD, the margins are fixed. So we cannot go beyond that. They'll not be giving us beyond that. But we try to improve our product profitability by improving with different product mix. And also, what we'll do is we'll improve our processes and...
No, got that. Because I'm just only asking because as compared to F523, F522, F523, there was a very sharp dip in margins. So when you say that margins... Due to product mix.
Yeah.
But then the product mix also is not, in a way, not in your control, right? I mean, it is what, the government asks you to make at those margins. So there may be big fluctuations in margins, like what we've seen between 22 and 23?
No, it will not be so much. Definitely, it will be almost similar to the previous years.
Okay.
Sir, recently the Ministry of Defence released the 4th positive indigenization list for many of the defence components. Are you aware if we are going to hear more, positive indigenization lists from the government, the Defence Ministry?
Yeah. Government is continuously working on indigenization, and few more positive indigenization lists will be likely to come. And it is an advantage to our company.
No, absolutely. But can you tell us that in the last 2 years, as these various PILs have been released, these indigenization lists, what has been the total benefit, for you? What percentage of your overall revenues can you attribute to this indigenization move by the government?
It will be at least 15 to 20% increase in our revenues because of that.
Got it.
Okay. All right. Final question then, sir, you're sounding so positive. Revenue is going to double in the next few years or so. Have you heard anything about the government of India wanting to bring down their stake from around 75%? Could there be any kind of OFS on the cards?
As of now, it's the government policy. No indications of that.
No indications as yet?
Yes.
Okay. I'll take one more stabs, if you will allow me, on margins. In FY19, sir, margins were 20%. In FY22, margins were 26%, and 23, they were 15%. So, I mean, 20, 25, and then 16. What should we work with? Where do these kind of settle? What's the number?
You can go with an average.
Okay, average 20, 25, and 16. Got it. So around, I'm assuming 20 odd percent is what as analysts, etc., are expecting. Thank you very much for joining us, sir, and appreciate you joining in with that perspective. So that's the management of BDL, 3,200 crores in revenues in FY24, that is this year, as compared to about 2,800 crores which they did in FY22. But then FY25, over 25 and 27 will be the big kicker, and they expect revenues to go up to about 6,000 odd crores by then. Stocks at about 1105, up about 1% or so.